Welcome to The Explainer. Today, we're diving into a fintech that's trying to do something pretty radical, completely rewire your wallet. They're mixing payments, credit, and even advertising all into one. The company? It's called Zilch.
So this is the big idea, the core question behind everything Zilch does. What if you could split any payment, anywhere, and do it for free? I mean, that's a pretty bold promise, right? It almost sounds too good to be true. So let's dig in and figure out how they pull it off.
Okay, so who's the company behind this big idea? Let's get the quick backstory on this fintech and see where they came from. So, at its heart, Zilch is a UK-based fintech company. But here's the thing. It's not just another payment app on your phone. It's playing in this really interesting space where payments, credit, and advertising all meet. And that mix? Well, that's the secret sauce to their entire business model.
And when we talk about growth, it's been incredibly fast. Just look at this timeline. They were founded in 2018, and by 2020, they're live in the UK. Just 2 years later, boom, they're partnering with MasterCard for a US launch. Then in 2025, they signed a massive deal with Visa for a physical card. And now in 2026, they're talking about buying a bank to expand into Europe. That's not just fast, that's lightning speed from a small startup to a major fintech player.
All right, so we know who they are and where they came from. But what's it actually like to use Zilch? You know, when you're at the checkout, either online or in a real store.
So when you're ready to pay with your Zilch card, the app gives you a few really powerful choices. You can pay now and actually get rewarded for it, or you can split the cost over 6 weeks or even stretch it out to 3 months, breaking it down into smaller, more manageable payments. They've even got this cool snooze feature, which is exactly what it sounds like. It lets you delay a payment if you need a little extra time.
And what's so clever about this is the simple choice you get. On one side, you can pay it all off today and get up to 5% back in rewards. Pretty sweet. On the other side, you can split that same payment over time, and here's the kicker, with no interest and no late fees. So it's a really clear trade-off, right? An immediate reward or future flexibility.
Okay, this is the part that I find really fascinating. If you, the consumer, aren't paying interest or late fees, then how in the world does Zilch actually make money? It's a great question. Let's break down their ad-subsidized model.
So Zilch has this special name for their business model, an ad-subsidized payments network. And that's really the core concept. What it means is that the money they make from merchants, who are basically paying to advertise to Zilch's customers, is used to pay for the service. That's what makes it free, or at least really cheap, for you and me. So how does this work in practice? Well, for the most part, the service is totally free for you. But in some cases, Zilch might charge a tiny fee. This usually only happens if the commission they get from the merchant isn't quite enough to cover the cost of the transaction itself. It's a way for them to make sure everything adds up.
But the real moneymaker? It's the merchants. Retailers are paying Zilch commissions and fees. Now, why would they do that? Simple. Zilch gives them a direct line to millions of people who are ready to shop. Plus, they can send out personalized offers to drive even more sales. For the merchants, it's all about customer acquisition.
And there's a third piece to the puzzle. Since Zilch issues a Visa card, they get to tap into the standard card network fees. You've probably heard of interchange fees. It's a tiny charge on every single card transaction. Well, Zilch gets a piece of that pie every time their card is used. It might seem like just a small slice, but when you're processing billions of pounds in payments, trust me, those small slices add up to a whole lot.
So what kind of tech is running behind the scenes to make all of this happen in like a split second? Let's take a look at how a payment actually gets approved instantly.
Okay, so this process basically happens in the blink of an eye, and it breaks down into 5 key steps. First, they figure out what you can afford using open banking and soft credit checks so it doesn't hurt your score. Second, a virtual Visa card is created for you, just like that. Third, your purchase gets processed through Visa's massive global network. Fourth, Zilch handles collecting all the repayments. And finally, number 5, they connect you with all those retailer-funded offers and rewards we were just talking about.
Now, Zilch isn't building all this from scratch. They're standing on the shoulders of giants, really. They rely on huge card networks like Visa for that use-it-anywhere global acceptance. They've also mentioned working with Marqeta, who powers the tech behind the virtual card and its spending controls. And the really critical piece is open banking. That's what gives them a real-time, up-to-the-minute view of your finances, and it's kind of the secret sauce for their super-fast affordability checks.
Okay, so we've covered the what and the how. But so what? Why does this even matter? Let's take a look at the actual impact Zilch is having, both for shoppers and for the stores they shop at.
First off, let's just talk about sheer scale.
By early 2026, Zilch reported having 5.5 million registered customers. I mean, think about that. That is a massive number of people to sign up in just a few short years.
And these users aren't just downloading the app and forgetting about it. No, they're actively spending. We're talking over £4 billion in purchases processed by mid-2025. This is not some small niche product. It's become a major channel for payments.
And just to put that into perspective, especially back in their home market in the UK, get this. 1 out of every 7 working adults is a Zilch customer. 1 in 7. That is just a staggering level of market penetration.
So you can really start to see how this creates this powerful self-reinforcing cycle. For us, the consumers, the appeal is obvious. You can use it pretty much anywhere, you get flexible ways to pay, and you get rewarded. And for merchants, well, they get a direct pipeline to a huge engaged group of shoppers, plus data to help them sell more. It's really built to be a win-win for everyone involved.
And all of this brings us to one final, really big question. As these smart, ad-funded, data-driven fintech companies like Zilch keep growing, offering more flexibility and better rewards, you have to start wondering, is the traditional credit card on its way out? You know, the one with the high interest rates and the rigid rules? Could this be the future of how we pay for, well, everything? It's definitely something to think about.